Hey everyone, welcome to Money Talks with Lisa Drennon. That's me. I am here as your wealth activator, your profit strategist to help you understand all of the things about financial literacy, the best time to retire, estate planning. So be sure to follow and hit the subscribe button, tap the bell to be reminded of when the next video comes out. Today, we are focusing on Social Security benefits. One of the things that I've heard over and over again is I have to wait until I'm 67 or until I'm full retirement age to retire. Mythbuster, you do not have to wait. You can collect retirement benefits as early as 62. And, why would you want to collect at 62 versus 67? There are several reasons, and there are several reasons why you may want to wait. So, just to give you a little bit of background about me, I retired from the Social Security Administration after a beautiful 30-year career. I was a claims technical expert specializing in the most complex cases, helping people, individuals plan for retirement. I worked on trust. I helped people get disability benefits. I specialized in Medicare, and I was a work incentive liaison helping people get back to work. So there's so many different facets of the Social Security benefits. But one of the things that I have found in the 30 years of my career is that people depended on third-party knowledge, third-party hearsay to determine when they should retire. I've had tons of conversations with my neighbors in my community who are still working beyond 62, thinking that they have to wait until their full retirement age or even age 70 in order to maximize their Social Security benefits. So, Social Security has been around a long time, and it was set up with the intention to supplement your retirement income, not be the end all for your retirement income. And back in the day, companies offered pensions. So you had your pension, you had your Social Security. Then there was a shift to 401ks, and now pensions are literally unheard of, right? Very few people get pensions. And so what we want to look at is when we're looking at our monthly income that we're generating after we leave our career, after we sell our business, will there be enough to take us until death, right? And when you decide whether or not you're going to take Social Security benefits, you want to look at the full picture. And a lot of times a financial advisor will help you do this, but someone like myself, a profit strategist, will actually look at it with no strings attached. I'm not making a commission. And, if I sell you an annuity, yes, I will make a commission, but annuities are for a specific type of person. So stay tuned. Again, be sure to hit the subscribe button, tap the bell. I will be talking about annuities in the future. But today we're focusing on that Social Security. So when's the best time to take your Social Security? Most people can take it at age 62. You have to be 62 the entire month before you can receive your first benefit. Benefits are going to run a month behind. So for example, if you turn 62 on May 10th, you're not fully 62 for the whole month until the month of June. Now, the benefits always run a month behind. So in July, you're going to get June's payment. Yes, it will be fully reduced, taking it at 62 compared to taking it at your full retirement age, which if you're born after 1960 is going to be 67 years old. That would be me. You will get a reduction. The reduction is based on a decimal of a fraction. It used to be percentages. It used to be safe to say that at 62, you're getting approximately 80% of what you can get at your full retirement age. Now it's not that way. And so what you want to do is set up a Social Security account. So log into SSA, socialsecurityadministration.gov, and establish your account if you haven't already done this. Very important for two reasons. One, you want to claim your account so that there's no identity theft. And two, you want to look at your earnings statement to be sure that you've been given credit for all of the earnings in which you paid Social Security tax on. Now, that's the key. Paying Social Security tax is going to get you your earnings. Everybody who works in America earns 4 credits per year. In order to earn 1 credit, you have to have a certain amount of gross earnings or net earnings from self-employment. And the earnings limit to earn a credit changes every year. So as the recording of this video, in order to earn one credit, let's see if I can Google it really quick. Yeah, I think it's 1180 for 2025. Nope, 1810. So if you have gross earnings of $1,810 or net earnings from self-employment of $1,810, you will earn one credit. And if you earn $7,240, you'll get a maximum of 4 credits. Now, everybody, that's the max that they can earn is those 4 credits. So when you think about how much I'm earning or how much my net earnings are, am I paying Social Security tax on that? Especially important if you're an entrepreneur, you got to pay those, so that you have to pay the specific FICA tax, the Social Security tax, in order to get credit on your Social Security earnings, in order to get a monthly retirement benefit. Okay. So you want to double check that. So when you log in and you create your account at ssa.gov, you want to look at your benefit estimate. And your benefit estimate will show you all of your earnings. It's going to show you your actual earnings, and it's going to show you your indexed earnings. Index earnings are the actual earnings adjusted for inflation. And they do this until your 60th birthday. Once you hit 60, it's the actual dollar amount that you earn. And those adjusted earnings, those index earnings, are used to calculate your primary insurance amount. Your primary insurance amount is the amount that determines how much you're going to get, who's eligible, how much money is your family maximum, which we won't get into. And it'll determine when you get a cost of living increase, or if you have additional earnings after you file for Social Security, those additional earnings get calculated against the PIA, the primary insurance amount, and then they determine what your monthly benefit amount, which is important to know, because when you go to get a cost of living increase, like 2%, everyone wants to calculate that 2% on the money that they receive in their bank account from Social Security, and it doesn't work. So Social Security gets a lot of phone calls. I didn't get a raise. What happened? So be aware that it's based on your primary insurance amount, and then it's reduced. So that primary insurance amount determines, and usually that's your full retirement age amount. So if you look at your benefit estimate statement, you'll be able to see the difference, see what you're going to get at 67. Now, what you want to do is be aware that if you file for benefits younger than your full retirement age, you are subject to an earnings test. The earnings limit as of this recording, which is April of 2025, you are allowed to work and earn up to $23,400. Again, that's gross earnings. And if you go over that amount, Social Security holds back $1 for every $2 that you go over that amount. So you want to look at your gross earnings, your net earnings from self-employment, and you want to determine, am I going to be making more than this? How will this affect my benefits? And if you're like me, born in December, you have to take that in consideration too, because you're not going to get a payment until January. So what will those projected earnings be for the following year? Now, if you wait till your full retirement age, the year that you turn your full retirement age, you can earn the higher limit, which is currently in 2025, $62,160. And then if you go over that limit, they hold back $1 for every $3 that you go over. So what happens is you take your earnings for the entire year, all 12 months, even if you don't file for Social Security until June. So say you turn 67 in December. From January through December, you look at your total earnings. Now, with the full retirement age rule, as the month that you turn your full retirement age, you can work and earn as much as you want. So for someone turning full retirement age in the month of December, we only count the earnings from January through November. So you have to determine, what will I make from January through November? Is it going to be above that threshold? Or if they hold back $1 for every 3, what will I get in my pocket? And the other thing you want to consider is, we all love this, taxes. A lot of people are afraid to file for their Social Security because they're afraid they're going to have to pay additional taxes. But yes, you will get a 1099 form showing what your earnings are. You have the right to voluntarily withhold federal taxes from your Social Security benefit, but there's a method behind that. We won't get into that today. But what you want to look at is, if my Social Security income plus my other income, does it bump me to the next tax bracket? Because you have to look at the taxes. If you go to the irs.gov website and you look at the tax bracket for your filing, so if you're married filing jointly and you're making, X amount of dollars, right? You are going to stay in one tax bracket, whether it be 22%, 15%, 22%, or whatever, in that range. 9 times out of 10, your Social Security money won't bump you to the next bracket. And that's very important to know when you're planning on taking your Social Security, because if you're not working or if you're earning under the limits that are allowable, why wouldn't you take it? And you have to remember that, you can take that Social Security money, especially if it's not subject to the earnings test, and put it in a high yield savings account and earn more interest on it than you could if you were just to let it sit with the Social Security and not collect it until your full retirement age. So the last thing I want you to do is contact your local Social Security office or the 800 number. You can call 1-800-772-1213 Monday through Friday from 7 a.m. to 7 p.m. Eastern Standard Time. And so like if you're in California, you can call later. And you want to ask for the benefit matrix. What you want to ask them specifically is to give you a printout that shows what your Social Security will be from the day that you call and what you'll earn from your full retirement age to age 70. These are called delayed retirement credits. I know a lot of you are advised, wait until you're age 70 to collect. But once you look at the numbers and you see the difference in the monthly amount and you calculate it, you'll find that the average person, it takes them, so if you file for Social Security benefits at age 62, it'll take the average person 13 and a half years after they hit their full retirement age to make up the difference in that reduction. So we can run the math if you'd like. I have a beautiful calculator that shows you your income projection, how much you'll need to retire. When is the best time to start your Social Security benefits? Is it 62 or is it some month in between? Another myth is I have to wait until I'm 63 or 64. It's a month by month reduction. So every month you're closer to your full retirement age, your benefit amount increases. So you can retire at 62 in 3 months, 62 in 4 months, 62 in 6 months. It doesn't matter. Once you hit 62, you can claim those Social Security benefits whenever you'd like. So if you'd like to know more, go ahead and book an appointment. Link is in the show notes. And let's get your income production planned. And this is for you. If you're 50 years old or older, you definitely want to start looking at retirement at Social Security and see what does the future hold. And even if you're making $1 million a month in your business, you still want to have, this is an additional income stream coming in for you, right? So you still want to know, well, how is this going to help me? How will it help my family, right? How will it help me my future? Because, at 80 years old, are you still going to be running your business? Do you still want some kind of income coming in, right? So always want to plan. And as your profit strategist, this is what my expertise is to plan for that retirement, that estate planning, plan to leave that legacy to your children. But you need to gather the information and you need to know the facts. You need to know how it all works together, and getting that wealth activation roadmap is exactly what we'll do for you when you book your call. Stay tuned and we'll see you on the next video.